We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro. I am here today with Sherwood Neiss, and Sherwood is located in Denver, Colorado. And right before the episode started, he and I were talking, and he was telling me about all of the adventures and everything that he's done and been into that has led him to the crowdfunding business, the real estate business, the raising funds business, whatever you want to call it. And so, Sherwood, how are you today, sir?
I am great, Casey. It is great to be here with you today.
So great to have you. And we always, as always, we appreciate our guests taking their time out of the day to share with myself and our listeners, their stories and how they got where they are. And hopefully the listeners could pick up some little nuggets here and there about what you've been through and see if it can help them. So tell us a little bit about where you came from and how you got going.
Sure thing. So I got my MBA in international finance. I went to Wall Street to learn about the ins and outs of how Wall Street works and capital formation takes place. Did not really care for a trading floor. I went to work on the retail side in San Francisco. Didn't really care for that side either.
Yeah.
Went to a Silicon Valley startup that was in a hypergrowth phase. Saw them creating thousands of jobs, saw the economic development that was taking place around the company itself and the community. Was just really impressed with that and wanted to be part of that for myself.
Sure.
So I started a healthcare technology company called Flavor RX with my brother-in-law. We flavored medicines for children so they're more compliant. We grew it from one pharmacy to 40,000.
Oh, wow.
Yeah, so swept the country. We did 3 rounds of financing, raised millions of dollars, but never once was able to raise money from our customers, the average American, because there were these laws on the books that protected them, theoretically, from investing in startups and losing all their capital. After we sold FlavorX, I wanted to change the securities laws, naively enough. So a couple friends of mine from Silicon Valley and I sat down and crafted a framework, very much like the exemptions under which I raised money for my private company.
Okay.
Brought that to Washington, D.C., started walking the halls of Congress because, that's what you do if you want to create a law, we thought. People were blown away. They didn't understand why entrepreneurs were in their offices. They're used to seeing lobbyists, lawyers, academics, but
Sure.
Never an entrepreneur. So we were able to meet with a bunch of people. We presented our framework on both sides of the aisle. We got traction. There was a Republican in the House Financial Services Committee that picked it up, called a hearing, testified at that hearing. The White House had someone sitting at that hearing. At the time, it was Obama. So they called and they said, we're interested in getting behind this. And so we had a bipartisan piece of legislation pushed through Congress. It became law as part of the 2012 Jobs Act, which now enables startups, small businesses, any real estate developer to go out and raise up to $5 million online from retail and accredited investors. So think about this pool of Americans now that are open to investing in all of these businesses. And it's been quite an impressive boon over the past 5 years. There's been over 5,000 companies that have gone out there and raised money. About $1.5 billion has been raised. So it's been, really, really impressive to see over 1 million average Americans get involved.
Man, before this show started and as we got into it, I had no idea that I was basically sitting with one of the brainchildren of the crowdfunding. Regulation A, right?
Regulation CF.
Regulation C, rather. I'm sorry.
Regulation crowdfunding. Regulation A is part of the Jobs Act too. There are 3 parts. Actually, 506C allows accredited investors to be solicited online. That was illegal before, no solicitation. Regulation A plus now allows you to raise up to $75 million in regulation crowdfunding.
Well, I'll tell you, that's just unbelievable that got like, I had no idea that you were responsible for that. So I'm trying to wrap my mind and get back to where I can wrap this in, because obviously in my typical interviews, the investors or people that are responsible for taking investor funds and going and buying multifamily real estate and then moving forward, and so like the questions are just bouncing around in my mind here about, and the fact that you all had the foresight to say, hey, we need to, because one of the big things that I had always heard was that doing something like a REIT, of course, requires going through the typical securities laws and the typical, the typical IPO type
Right.
stuff that just takes months, if not years, and is cumbersome and costs so much money. And so basically you all said, hey, there has to be a bridge for this. Then we have to create a bridge where this gap can get financing or raise capital without foregoing everything they could potentially make in order to make that happen.
Oh, yeah. I mean, the opportunities here, think about, if you're doing a REIT, you're raising millions of dollars of capital to invest in projects, globally or just, wherever. This takes that same concept and allows an individual developer now, someone that wants to either build out a strip mall, renovate a strip mall, renovate a home. I mean, think about the fix and flip opportunities here. If you don't know what you want to do with your career, but there's some real estate around you that looks like it could use an upgrade, this is a great way for you to actually go to the people in your community that are closest to you that know what you're able to achieve, raise the money from them to actually do the renovation, and then sell the property. So you can buy and sell properties, you can renovate properties, you can do small projects, but $5 million is the cap in investment crowdfunding. So you have to scope your expectations about what you can achieve to the $5 million. I would tell anyone that's interested in this, start small, start with one project, prove what you can do, and then move on.
Now, what does the legal documentation look like? Because I know from a 506c standpoint, which is what we do, fund of funds and one-off syndications, things like that. But from a legal standpoint, so if somebody wants to, and I know what my attorney charged me to set my fund up, and obviously, if I go out and I'm doing a smaller project, is there legal structures and obviously operating agreements, or because you have a multitude of different ways somebody can hold title to that individual asset. And I guess I'm just trying to figure out what and where does somebody start with, do they just call an attorney and say, hey, I want to do a regulation CF, right?
Right.
And then obviously you have to have an attorney specialized in that, but what does the structure look like?
I mean, the beauty about regulation crowdfunding is the structures can be any type of structure, really. What I would tell people that are listening to this right now is go to platforms like Small Change, Realty Mogul, and see the type of deals that are happening on there in the real estate space. Those are both real estate platforms, because you can look at the offering documents that they put together. So the investors are investing in an entity. So you probably have like a C Corp or something, or an LLC. And you'd be issuing either stock or membership units in that company. You would have that capital then to do what you're going to say, and then you can provide returns to your investors that way. You need a business plan. You need to tell people about, the asset that you're buying, or the costs that you're going to put into it in terms of renovation, what you think you can sell it for. Typical things that you'd find in any type of real estate offering are going to be the same type of disclosures that you're going to have in this one.
Okay, so pretty much the basic stuff. And what I always try to tell folks, especially people that ask, they're like, because again, I know what my attorney charged me, and there's a lot of zeros at the end of it. And when you come and you're like, all right, how do you make that profitable if the first X number of dollars goes towards this? And the theory, at least in my mind, is maybe the first one pays for the structure set up, the documents, the legal entities and stuff like that, teaches you get some education, and the first profit off of that, but then you duplicate it, and then you duplicate it again, and maybe not necessarily duplicate the legal documents themselves, but you duplicate the process, and it becomes it just seems like it becomes more profitable as you move along. So and I guess all of us, at least from a business standpoint, what type of resistance did you have? Did you have any resistance from when you started walking the halls of Congress to try to say, hey guys, this needs to be done?
In the House, we had no resistance because nobody thought we'd get it done. It was only when it passed the House floor 407-17 with almost unanimous support from both sides of the aisle, and then when it was picked up by the Senate, did we have state regulators come in and say, we're not in favor of this. They're not in favor of it, rightfully so, because there was no experience related to this. People call them with fraud all the time. All they see is fraud. They didn't understand the framework under which this process would happen, that it's a regulated process. Yep. And so they were coming at it from an investor protection point of view. Luckily, we were able to speak over those objections. It passed. And even at the White House, I had a state regulator come up to me and say, I hope you're prepared to be sued for everything that you own. Which I didn't quite understand because, again, I wasn't putting these offerings together. This enables Americans to go out and raise money in a very regulated structure. So, again, I left the White House going, these regulators still don't understand what happened. But I've come to learn that, they're just busy people. There's a billion things going on. Yeah. I think since then, obviously, this Exchange Commission has become quite comfortable with this because they increased the caps last March from 1 million to 5 million. So they, and there's been one case of fraud in this entire industry. Now compare that to the fraud that takes place in the private capital markets all the time.
Yeah, or even just the mutual funds, Bernie Madoff kind of thing.
Right. And so that's all happening under their nose. And the fact that there's been one fraud in 5 years out of all this, I think proves that it's very hard to commit fraud under this framework.
Yeah, and it's also that, when they start talking about that type of institutional fraud, I guess if you will, anything under 5 million is probably not worth those kind of fraudsters' time. Because if you're talking institutional stuff, you could be talking hundreds of millions. But nevertheless, so the House didn't give you any resistance because they were like, "Hey, you're not going to get it passed anyway." And the Senate, oh my gosh, man, that's so crazy to me that it took so many years for somebody to say, hey guys, there's a niche of the market here that really needs to get this figured out. And then of course, there's always even today. So we're like almost 10 years into the Jobs Act, and even today, talking to bankers, there's a multitude of people that don't even realize that this exists. That like, hey, I can. It's like, and I'm like, hey guys, it's business. It's business. Been the same business model forever. You have a group of people that want to own portions of an LLC, and they all want to own these portions. You're just providing it back in a return of capital / investment type return. It's the same deal. So, and so what was what was your first deal? You obviously you've taken this thing all the way up to here, and then did you just immediately turn around and go raise money?
We were interviewed by Bloomberg after we left the White House, and they asked us what we're going to do in the space. And we spent 460 days leading up to that lobbying. And so, we weren't quite sure because we were told by the people that were pushing us through, they wouldn't get behind it if we were to build our own platform because they didn't want to back us if we were quote unquote self-dealing. Like, well, we won't build a platform. We'll find something else we can do.
Sure.
And so Bloomberg sort of seeded the idea, like someone's got to build the database that aggregates data on every single one of these issuers that's raising money, because we take feeds like that, and that's how we turn that into news. Yep. And that's how we turn that into research, and that's how we turn that into analysis. So that's what we did. The company that I worked for in Silicon Valley was a database company. Yeah. So I knew databases. So I built the database. And so I connected that to the initial platforms. Now it's connected to over 60 active platforms. There's over 1,000 active offerings daily that are raising money. And so we're pulling in data on every single one of these issuers that's raising money online. And then I transmit that data over to Bloomberg every day. Now that's also data that I use to do analysis that we provide to the SEC, to Congress, to investors. We just came out with a 2021 year in review report. And we do things like valuation reports now. This is a whole service that we started out of this. You've got companies, so not necessarily in the real estate space, although it could be, but private companies that are trying to figure out what's my true valuation. I have an entire database that can show them comps. You get comps for your house when you buy real estate to see what your house is worth. The same thing for private companies. I've got over 5,000 valuations in there, and I can show pre-revenue, post-revenue. I can show if you're post-revenue within revenue ranges or income ranges, what other similar companies in the same industry code have, and then people use that now to go out and raise capital because they have the access to that information.
Well, that's, so the database, and that's what, the information, the age is so much more than that now, because it's actual, like, I don't know, man, that's unreal. I'm blown away. The thought that all of this started because you were flavoring children's medicine, of which my children have taken, I'm sure, by the way. I think we have the bubblegum flavor. I don't know how many of those bubblegum flavored antibiotics we've been through, but nevertheless, I'm sure now that's what we're talking about, right?
Bubblegum, grape, watermelon. You go into any CVS, Rite Aid, Walgreens.
That's killer, man. That's awesome. And then to transfer that and to notice that there was that niche. I know I keep saying that, but I'm just like, that's how people like the listeners out there. I know, and I don't want to get too lost in the weeds of. And I tend to get lost in the weeds of technicalities of, well, what about this document? What about that document? And I don't aim to do that. But for the listeners out there that wonder, like, how do I get started? And it's just like Sherwood here. He noticed that there was an issue. It was probably more of a complex issue than most of us are looking for. But nevertheless, he saw an issue. And how about that for action? Taking action is where we're all that's where we're all lack. If you're taking action, take more action. And so to take that and turn around and use his knowledge, your connections, your power, or whatever you want to call it, to get in there. Now, one thing that I think gets lost on a lot of people, you mentioned the word lobbyists or lobbying. What did that look like? So you're standing there with your proposal, and you're like, okay, hey guys, we need to work on this. What did that part of it look like?
Well, I did some research prior. I spoke to people in DC. I was actually living in DC at the time, so I had a lot of friends that worked on the Hill. We had the connectivity to the Small Business and Entrepreneurship Council, and they helped guide us. And what I learned is you go into this with the solution. You don't go into something with, this is a problem, we need to have a solution. You go to Washington and you say, I have the solution to this problem. And if we address it, we create jobs. Everyone in Washington buys jobs. We create innovation. That leads to economic activity. So more taxes for you policymakers. Then you really start getting their attention. And then what the job is you go door to door, you make appointments. You don't speak with the representatives or the senators. You speak to their staff. And quite frankly, we didn't want to speak to the representatives or senators. We couldn't anyway because they asked us for checks and we didn't have checks. We had to speak to their staff, but their staff were all young people online. And we said, do you know you staffer are precluded from investing in your best friend that has a startup? And they were all offended. And I was just like, well, that's the way it is. You aren't, smart enough and you're not wealthy enough to take a risk with $100 of your own money. And they're like, well, that's not fair. Yep. And so we educated them on these securities laws that were written in 1933 and 34. And I said, everything else we do is online on a computer in the digital space with information that's flowing, but capital formation isn't. And so that's how we presented the problem, the framework for the solution. We showed them how we could get capital flowing in a very limited format in a very risk-free manner.
Sure. And it goes to a sector of the market that is, and it creates those brain juices, I guess, if you will, of people who are like, here's an idea, and this idea is killer, and it's gonna we could do all kinds of different things with this bubblegum medicine flavor, and it just opened up an entire sector. Like now all of a sudden these people can get money, they can get finance, and they can get almost a venture capital to a degree on a smaller scale, but nevertheless, it allowed them to really kind of prosper, or not prosper, but flourish, I guess you will. And again, yes, and I've been to the Capitol where you walk in and you go through those big granite or rock halls, whatever they are, and you get to the senator's office and go in, and there's I don't know, 7 or 8 assistants. You got an agriculture guy here, you've got a business guy here, you've got a art person here, and and you're right. And to get in and say, hey, these are the people we need to influence to start with, so that then they pass along to their representative or senator and say, hey, I think you need to really pay this attention. Here's a synopsis of what they're going to do, and then he decides how he's going to vote right there, right? Based on,
oddly enough, from what we learned is the staffers tell the senators and representatives what they should be doing. So they give the congressional member the information that they need to make the decision, but they also tell them that this is probably a good thing for their constituents and something they should get behind. The senators don't have time to sit there and read everything.
Sure.
House members don't either. You'd think they do, but we learned with all of these pieces of legislation, none of them read it.
Oh, and you're talking about something, and that was the first thing that we use all these different apps where you can turn up the speed of somebody talking. You can listen to Voxer or whatever it is. You can listen where somebody can leave you a message. You can listen to it in 2 times the speed and cut your time down. And so when all of that, and I don't know, there was a health bill or a healthcare bill or something major that was passed a few years ago, and it was like, I forget what it was, 170 something pages long, and I'm like, okay, so all these people are saying what they're doing here, and I'm supposed to believe that every one of them sat down and they didn't squeeze something in the back that they didn't catch, and then. And now when you start looking at it and saying, hey, these staffers read different sections, and it ultimately ends up being something that gets worked together, it's just unreal. It's unreal. And I guess that's probably where the lobbyists come in, is they just are they're just like relationship bridges, I'm sure, where they're like, you go to them and say, hey man, I really need to get in and talk to so-and-so, the ag staffer for so-and-so, and I'm sure they kind of arrange that and work that and build those relationships. So.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
Man, that's awesome. What an experience. I'm sure you just learned along the way, right? And did you all have, did you have to hire attorneys to write the stuff, or was it something you just sat down and just pounded out, or what? How did that look?
That's an interesting story. So we wrote the framework. The legislation the framework was turned into a bill. Okay, the bill passed the House, and then in the Senate, 3 different senators, 2 Democrats and a Republican, picked it up.
Now, did you have to find an initial sponsor for the bill? So you got it turned into a bill, and then you went to maybe your representative and said, hey, I want to propose this?
Darrell Issa, who is not in Congress now, but he was a representative of California, was the one that picked up on this originally.
Okay.
And you're right. You need to find someone that'll be your champion. And then he turned it over to Patrick McHenry, who's been a champion of this ever since. He's a Republican from North Carolina. And then but you have to learn to play on both sides of the aisle. And one of the things that we learned is from the people, from the staffers, they're like, do not pick a side. Your job is right in the middle, and your job is to talk about jobs.
Yep.
And they're like, just talk about jobs, and everyone will be on board. And that's what we did. We just talked about jobs. So you learn things when you talk to the staffers too, because if they really like what you're doing, they will help usher you through.
You in with the staffer for so-and-so because they have coffee every morning, and then get you in with the staffer of...
Yeah, right. Part of what you ask is who else do I need to talk to? And then, you do this on both sides of the aisle. When it got to the Senate, we actually, it was stalled because there were 3 different versions. So we sat there and we merged the 3 together on our own. We took what we thought they all agreed on, and then where we thought there was disagreement, we came up with a compromise. And then we presented it to both sides of the aisle as the common sense crowdfunding compromise. And
that always gets thrown in there. Everybody always politicizes. Well, it's just common sense.
Right. And so then they all asked us, because they don't speak to each other, is everyone else on board? And we said, yes, they are. And so it went to part of the Jobs Act. And the day before it was being voted on, an attorney for the Senate Banking Committee called us in and said, I just want to go over a few things. And so he said, who's the law firm that worked on this? And my partners and I looked at each other and we're like, was there supposed to be a law firm that worked on this? And he's like, are you kidding me? And he's like, we're about to pass something into law that has not had a law firm review it. And I was just like, well, it's not that long. I mean, the bill itself was 8 pages. It's not that hard to just read the whole thing. It's very plain and simple to comprehend. But he was not happy with us.
So what was this 8-page document? What was the actual title of this 8-page document?
Well, it was HR 2930 in the House, but it was called, I think it was called something like investment crowdfunding.
Wow, man,
yeah,
that's awesome. And I hate to go so much into the framework of actually how that got to where it is. But at the same time, it's intriguing because, a lot of people, including myself, nuances as far as how things get done, turned into law, and then what that looks like on the other side. And then, of course, they always said that, things get manipulated and changed, and they might change the wording here and they might change the wording here. And then even after it goes into law, then it's challenged, and then maybe it takes something else to maybe they say, hey, we need to clear up this side of it over here. And then, so it's just like anything. It's just like legislation at the state level or anything like that. It goes into law, and then it even continues to evolve and formulate into whatever it is. And we know what Regulation CF has formulated into. I mean, formulated to people being able to raise millions of dollars and to get a lot of these smaller ideas off the ground and get going, which turn into bigger ideas, which turn into jobs, turn into income, turn into taxes, and so on and so on and so on. So, well, listen. So I want to take just a few minutes, and I know I've been all through this whole perspective of how you got this bill done and everything like that. But I want to hear a little bit about your business. I want you to talk to the listeners and tell us a little bit about what Crowdfund Capital Advisors.com is and how it can help them possibly.
Okay. So we're a consulting and advisory firm. We work with entrepreneurs on how do you put these offerings together, which is the right platform to go to, what's the right valuation. We work with investors on how do I diversify into this space. We work with organizations like non-government organizations, family foundations. We just worked on a project in Arkansas that was a workshop, a 2-day workshop, 1 in the morning for entrepreneurs, 1 in the afternoon for investors, essentially explaining what is investment crowdfunding and what do entrepreneurs need to know if they want to, raise capital from the crowd. Same with investors. We talked about diversification. We talked about the opportunity. The investing in the early stages of companies, it has the highest return. The earlier you get in, the lower the valuation. If it goes public, you stand to gain a lot of money. Now, of course, that public offering is going to be far and few between. Yeah. But if you just invest, if you spread some money over a lot of these offerings that's taking place, you can do that as well. We are working with a data science group on the data to pinpoint what we believe are the future unicorns that have come out of the space to invest in those. So we're sort of all over the map. We're active in secondary trading because once these companies raise capital from investors liquidity. So we work on the liquidity side with another startup that we're involved with called Guard. Guard facilitates the secondary trading of these securities so that investors want to get out early. They don't have to be tied in for 7 to 10 years. They can sell it on an exchange, and Guard handles the compliance, the state compliance that's needed there. So, reports, analysis, you'll find our data on Bloomberg.
Guard creates this basically a secondary market for the shares, right?
The secondary markets are there, but what you have to do is you've got an issuer and you've got the secondary.
They handle the compliance.
We handle the compliance that's in the middle.
Gotcha.
You can't do secondary. Secondary trading it's governed at both the federal and state level.
Well, that was the first thing that hit me when you said that. I was like, wait a minute. Secondary, but yes, okay.
Yeah. So with secondary trading, though, it's at the state level so then you have to comply with all 50 different state securities laws.
Yeah, is that what they refer to as the blue sky laws?
Exactly. Yeah, so Guard helps these issuers comply with state blue sky laws so that they can file once with us and essentially allow their securities to trade in all 50 states.
Wow, man, how deep! And what a treat for the listeners to hear just some of these little things about how ultimately this business has got to where it is today. And I love the idea that so basically somebody has a teeny tiny idea to invent something or needs financing for something. They get that, they carry the product through development, and like you said, the earlier the investor comes in, the higher rate of return. So you invest $1 million in something that becomes $1 billion product, you're in at the very beginning. But the fact of the matter is that once it gets to a certain point, then you can advise people on, say, hey, we need to take this, and then you can kind of turn and start aiming that towards what has always been there in the form of an IPO or something like that, correct?
Correct.
Man. Talk about the whole American dream under one roof. That's what we're all, it's capital, man. That's capital. That's where we're at. That's where we want to go. So, well, Sherwood, I tell you what, man, I can't believe that you have been through all of that and are really still standing according to what the news talks like. You can't hardly, you hear so much that comes out of the halls of Congress and you really don't know what to believe, what not to believe. But here's a man right here, guys, that went there, tackled and conquered and got done what needed to be done because he saw a void in the marketplace. And again, it's all about that, seeing something that needs to be fixed, helped, nurtured along, whatever the case is, and he did it. He did it for all of us. So, Sherwood, thank you. Now, I want you to, real quick, can you tell the listeners, if somebody wants to reach out to you, maybe they're on the fence, or they have something they want to work with you, or maybe they're in the middle of it. How can somebody reach you in order to see if you're able to get them some assistance?
Sure. So I would tell anyone to go to our website, crowdfundcapitaladvisors.com. Or you can just email me directly, Sherwood, SHERWOOD, at theccagroup.com. If I don't reply, we've got someone from our team that will get back to you. We get requests all day long from people.
Oh, I'm sure it's because everybody has an idea. Everybody has a way to make money. And I want to just to clarify, that is Crowdfund Capital Advisors, plural, advisors.com. I'm notorious for that on my show, Sherwood. I always want to make sure everybody has exactly what they need to get where they need to go. So, well, man, listen, we appreciate your time. I appreciate it more than you'll ever know, the stuff that I just learned here today myself. I can't imagine the listeners out there. Hey, if you all have questions, he gave you his email address. Again, he said that somebody on his team or himself will get back with you. And as always, Sherwood, thank you so much for your time.
Thank you.
Yes, sir. I really appreciate it. And listeners, we will talk to you tomorrow. Thank you.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.